What's up, guys? Eric here, Mr. Fired Up Wealth. One of my core holdings is Salesforce, ticker CRM. It's buying Slack, ticker Work. And since Salesforce announced this acquisition in the last earnings, the stock's been beat up pretty good. Is it a buy at these levels? Stay tuned to find out. Okay, so a quick background on Salesforce, in case you don't know who they are, what they do. Most of you probably have an idea, but Salesforce, it really was created to be customer relationship management in the cloud. So sales teams use CRM to basically track their leads, to stay in touch with their customers. It's customer relationship management. So Mark Benioff is the CEO and founder of Salesforce. He actually came from Oracle. His mentor was Larry Ellison, who was the founder and CEO of Oracle for many years. Larry Ellison is still with Oracle. And there's been a lot of top talent that's come from Oracle, including Mark Benioff and Salesforce, including the folks at Workday, at Viva Systems. Most recently, C3 AI, that's Tom Siebel. Tom Siebel was actually the guy that created Siebel Analytics, which when I worked at Oracle back in 2008, 2009, 2010, I used Siebel Analytics. And that was just after the merger. So Siebel Analytics actually merged with Oracle in 2006. So there's a lot of history in Silicon Valley with the Oracle crew. And I have followed the stock for a long time. I've owned it for a long time. And I want to cover this because I think it's a very useful topic right now. A lot of people are asking me if it's a good buy. And I want to give you my analysis. And then towards the end, I'm going to tell you what price I think it's a good buy. And I'm going to give you the reasons for that as we go through this video. So before we get into that, it's important to understand really where Salesforce CRM has come from and where they're trying to go and their journey along the way. Because not much different from Oracle, they've used acquisitions to really position themselves to be the strategic leader. And so right here on their website, it says, what is Salesforce? Salesforce is the world's #1 customer relationship management. So it's CRM. Their ticker is CRM, which is a brilliant CRM, of course. That's awesome. We help your marketing, sales, commerce, service, and IT teams work as one from anywhere so you can keep your customers happy everywhere. So they're really playing off this work from anywhere type environment. Now, it's important, I think, to see just how many acquisitions Salesforce has done over the years. You can see this is just from Wikipedia. This is a list of all their acquisitions. You can see 2006, 2007, 2008, 2009. They've acquired companies pretty much every year since 2006. And they've had some big ones over the years. Some of these are smaller. You can see 12 million, they get bigger though, 689 million. There's companies you've never even heard of. And you're like, well, why are they acquiring all these companies? Well, they're trying to create this platform and they're doing that through acquisitions. If you look at this, they've had some major acquisitions over the years. If you look back, Exact Target, they paid $2.5 billion in 2013. You've got Demandware for $2.8 billion in 2016. So you had a 2013, 2016, huge deals there. You had Tableau, $15.7 billion, which I'll get to in a second. MuleSoft for $6.5 billion. So in 2018, they acquired MuleSoft for $6.5 billion. Then they acquired Tableau for $15.7 billion. And it's important to understand what a couple of these large acquisitions are. And it'll really paint the picture of what they're trying to accomplish with their growth model and where they're trying to get to over the next 5 years. So let's first look at MuleSoft. So they acquired MuleSoft back March 20th in 2018 for $6.5 billion. And MuleSoft provide a software platform that enables organizations to easily build application networks using APIs, the digital glue that allows applications to talk to each other and exchange data. So APIs basically allow different software platforms, say you're using, a Datadog with a PeopleSoft with a, whatever. You could be using different software platforms, and these APIs will allow this software to talk to each other. And that's very common in enterprise technology, especially with large organizations. If you're using a best of breed type environment, you have lots of different vendors and you're using APIs to make these things communicate. Well, MuleSoft really helped them a lot when it came to a lot of the larger customers back in 2018. They were just beginning their cloud transformation journey, digital transformation. Of course, it seems like ages ago because the year 2020, because of the pandemic, we've had 5 years of digital transformation kind of crammed into 5 months. But MuleSoft allowed Salesforce to get into some of these bigger customers because not all these customers were ready for the cloud. They still had on-prem or legacy type systems, and it allowed them to integrate Salesforce into their business to basically, get to the next level with some of these larger customers. So these organizations were not born in the cloud and still have a heavy legacy IT infrastructure. What I mean by this is older on-premise software, as I mentioned, are still in the mix, and they need to be connected to Salesforce or other software as a service SaaS type products. In some cases, sticking to legacy and integrating is less risky and less costly than migrating. This is where MuleSoft comes in. So there's some businesses, and it could even be in healthcare, and there's different industries that are less accessible. They don't want to go to cloud nearly as much as some of these others. Other industries. And so there's always going to be a need, at least in some capacity, especially back in 2018, as that digital transformation is happening, there's a need to get in with these customers and grow with them, from that infrastructure as a service, that IaaS, or that platform as a service, that PaaS. So usually you talk about, SaaS, software as a service, but there's also infrastructure and platform as a service, probably for another video. But the other big one was Tableau. And Tableau they acquired on June 10th of 2019. So that was just this last spring, summer. And they acquired Tableau for $15.7 billion. Now, with a lot of these especially the big acquisitions, you always hear, oh, they paid too much. They don't know what they're doing. And then the share price gets hurt. Investors are a little spooked, thinking they paid too much. And then what happens? Salesforce integrates them. They end up, proving everybody wrong, and the stock keeps going up. The business keeps thriving. I think you're going to see the same kind of thing happen with this acquisition of Slack. So before we get to that, Tableau, they paid $15.7 billion. So why did Salesforce buy Tableau? It really comes down to analytics. Tableau allows them to do some pretty powerful analytics with the data. And you think of C-level executives, they really want to have visibility into the business. So part of digital transformation is allowing executives to have insight and have insight into that data. And so Salesforce is enabling that by using Tableau to basically integrate with all these other products they have so that, there's visibility, not only from the Salesforce, but all the way up the chain to the CEO, have really strong data and analytics so they can see what's going on with their business and try to get the most effectiveness and the most efficiency out of their companies. Okay, so this leads us to Slack, and I'm going to cover this in a lot of detail, but just from a high level, I thought this was good. So the acquisition date is December 1st, 2020. So this literally just happened a couple weeks ago. They're paying $27.7 billion. A lot of people would argue that that's probably too expensive. We're going to go through that a little bit and talk through some of those numbers. Why did they buy them? This article here is saying that Slack could be the silver bullet for Salesforce to basically enable that social enterprise that they're trying to be number one at. It really comes down to the new virtual sales and service demands organizations need because of the pandemic. And we think that digital adoption is going to continue to be important with our digital economy, our work from anywhere type economy. Okay, so this is the Salesforce and Slack, December 1st. This is a presentation you can get off the Salesforce website. And it basically goes into detail of why they want to acquire them. It gives some really powerful information. So here's the transaction and financing overview. We kind of briefly talked about it in the earlier slide, but this goes into more detail. So Slack shareholders will receive $26.79 in cash and 0.0776 shares of Salesforce common stock for each Slack share. So this reflects an enterprise value of about $27.7 billion, which we mentioned earlier. Slack will become an operating unit of Salesforce and will continue to be led by CEO Stuart Butterfield and his leadership team to further the mission of Slack to make people's working lives simpler, more pleasant, and more productive. So that is important to note that they're keeping the same team on board, which generally will help quite a bit with these acquisitions, just making sure that the ship continues to sail the way it's been sailing. And actually their last quarter with Slack, the ticker is work. Their last quarter was pretty good. So it makes sense to keep them on for a while. I won't be surprised if that changes in a year or two and they buy them out. But generally speaking, they want that smooth integration, so they're going to keep them on board. Anticipated close is the second quarter of fiscal year 2022. So this is actually going to take some time to get done. It's a pretty big acquisition. It's subject to approval by Slack shareholders. It's also subject to satisfaction of the customary closing conditions, including regulatory approval. So it's not a done deal. It's part of the reason why the stock is churning, because there's a lot of uncertainty. There's people trying to digest, is it too much money? Is it going to get approved? All those different types of things. So let's look a little closer about why Slack is important to the business model. So Slack is the engagement layer where the conversations happen, the problems are solved, and the decisions are made. So when you think of Slack, a lot of the sales teams are actually using, Slack already. And in fact, if you look at Salesforce CRM, they have an internal product, I believe it's called Chatter. And I've seen different articles online where the employees were actually using Slack instead of their own internal tool because they liked it better. So there you go. That kind of does make sense. The other thing I want to point out about Salesforce is that these guys are really good at this space. If you look, they have Salesforce Ventures, it's a venture capitalist group. They have been involved in some of the major deals like Zoom and DocuSign and Snowflake. So these guys know what they're doing in the SaaS industry, and I trust their judgment more than the average person that's buying, paying $27 billion, for an acquisition. But I really do, the more I look at this, the more I think it makes a lot of sense. I think that it actually unlocks value for both Slack and for Salesforce. And assuming it gets approved, I think there's going to be some good things that will come out of it. You can see here, it says 100 plus average minutes of active use per day and 10 plus hours connected to Slack per day. That seems pretty high. Slack's platform enables developers to bring workflows right to the users where the conversations are happening. Now, this is really, really important. So if you look at your screen here, they've got this nice chart. It says humans and then machines in the bottom. So top is humans, bottom is machines. I'm trying to give you a little bit of space so you can see the whole thing and have my camera in there. So you've got ad hoc on the top left, you've got structured on the bottom left, manual on the top right, automated on the bottom right. So there's a question here from human. Andre, what do you think? Does it make sense to you? Yep, we ran the numbers with Amy, good to go. Now, on the bottom end, the pragmatic end, so conversational on the top, pragmatic on the bottom, a purchase order has been submitted, purchase order, numbers 0945, update approved. So Zia is asking for approval on the purchase of the new forklift, and boom, Slack's allowing that to happen through, this integration. So you've got engagement level, you've got the applications level, and the data and systems. Slack is allowing to be that front-facing, product or tool that allows those conversations to integrate together. Now, here's Slack Connect. This is transferring inter-enterprise communication. Now, you can't really see this very well, but this is actually a global map. So if you look, this is Africa in the middle, South America on the left. All those lines are different communications. It shows 520,000 plus connected endpoints, 240% year-over-year connected endpoint growth. This is showing growth in Slack. 64,000 paid customers using Slack to connect. So it's combining the number one platform with the most innovative enterprise communications platform. On the left, you've got Salesforce. On the right, you have Slack. $21.1 billion for FY 2021 revenue. That's 23% growth rate. On the right-hand side, you have $876 million for the revenue and 39% growth rate. They had, like I said, a good quarter. Look at the apps, the App Exchange listings, 5,000 plus employees, 54,000. On the right side, you got 2,400 and 2,500. So combined, you're looking at over 55,000 employees. You're looking at close to 7,500 App Exchange listings. You're looking at some pretty good growth. So Salesforce plus Slack strategic rationale. Slack is a category leader. Deep Slack integration with Salesforce products. Basically, all these different products that they can now bundle together and be one throat to choke is what they like to call it in the industry. It's a combination too. It joins two open and extensive ecosystems and Salesforce proven playbook for enterprise expansion. We kind of showed you earlier that these guys have done a good job actually making strategic acquisitions and making them work successfully. So this is saying, Slack is a category leader. Slack is one of the most beloved platforms in enterprise software history with over 100 plus minutes of active usage per each day, which seems like a lot to me. Slack serves small businesses all the way to Fortune 500 companies, as well as leading academic institutions, nonprofits, governments in more than 150 countries. And Slack Connect is emerging as the new gold standard for trusted collaboration across organizations. So it's the more you look at this, And a lot of people have liked Slack for a long time. And just in the beginning, for me, the growth wasn't really there. They're really starting to, it looks like they're starting to fire on all cylinders. It would have been better as a Salesforce shareholder. I own Salesforce and not work. It would have been better to buy them before, but my guess is they wanted to see that it was proving. It probably took a long time for all the chatter to actually go through to get, these type of deals don't happen overnight, so it probably took some time. But it would have been better to see them do the acquisition maybe a quarter or two earlier, because they probably would have got a little bit better price. But either way, I do still like the acquisition. The combination joins two open and extensive ecosystems. I think this is really important. So on the left-hand side, you've got 885,000 active developers that build on Slack. You've got 2,400 apps. We mentioned that earlier. 2.6 million trailblazers as part of the Salesforce ecosystems. Salesforce and Slack will create the most open and extensive ecosystem of apps and workflows for businesses and empower millions of developers to build next generation of apps with clicks, not code. You're seeing that more and more about, not code. You think of like an Appian, you think of an Alteryx, those type of stocks. Those are to help people not have to be as good of programmers, basically. And there's going to be controversy on that, especially if you're a programmer, like they can't do it as well, but the fact that you have to realize is that you're seeing it more and more. You're seeing more and more of that, and kind of watering it down. It'd be interesting to see how that plays out over time. But it's definitely a trend that you've been seeing more and more. 142,000 paid Slack customers, and then 1,080 paid Slack customers above 100,000 in ARR. That's a pretty good number. Okay, this is really important right here. This is Salesforce Customer 360. And I think it really paints a nice picture of what they're trying to accomplish with this entire integrated platform, right? So you've got Slack right here, but you got sales, service, marketing, commerce, analytics. There's your Tableau right there. You've got integration, platform, industries, learning, employees, partners, success. They're making this wheel, and Slack is in there. Now, earlier we saw something about 2022 for closing. This says subject to the closing of the proposed acquisition of Slack, anticipated in the fiscal quarter ending July 31st, 2021. So I think it is important to note that this is actually July 31st of 2021. If you scroll back and you look at this here, it says anticipated to close in the second quarter of fiscal year 2022. So they're not going off a calendar year; they're going off of a fiscal year. And so when you look at this number, that's going to be actually July 31st, 2021. So we're only looking at basically 6 months away from where we're at now, where they're thinking this acquisition is going to happen. So the reality is this: if you look at GDP, now this is done by IDC, and this is saying non-digital GDP. Look at 2020. This is this report just came out in August of 2020. If you look at non-digital GDP in 2020, that purple, it's mostly, of course, it's 63 to 23. So for your non-digital to your digital. Now look out to 2023. This is actually predicting that digital GDP is going to be larger than non-digital GDP. That's powerful. And you've heard of, software is eating the world, especially software as a service is eating the world. And this whole digital GDP, it's real. That's why my portfolio has a lot of these companies in it. And there's a lot of opportunities still for these companies to continue to grow. When you think of the C-suites, you think executives at corporations, especially the mid-size and the large type companies, they're really talking more and more about digital transformation because of the pandemic. And when you think about what's important to them, it's digital trust, digital infrastructure, cybersecurity. These type of stocks, including Salesforce, are going to benefit from this new digital economy. Salesforce is trying to be, they consider themselves number one CRM, and they probably are the best of breed CRM. And I think most people wouldn't argue with that. They're also trying to be number one analytics and number one integration company. Leading with our values, Salesforce is the trusted guide accelerating customer success in the new all-digital work anywhere economy with Customer 360. Have you heard that before? Microsoft Office 360. Oh, look, Customer 360. Very clever. We saw this earlier. It talks again about the Customer 360. So this is that wheel again that we just showed you. That shows all the different services that they want to have in their wheel to make themselves that one complete solution for CRM and for customer-facing data. Portfolio of expanding TAM. So look at this. This is the total addressable market. We talk about TAM a lot on the channel. If you look at this, this is showing sales, service, commerce, marketing platform. You can see the different colors, but look at that growth from FY21. They want to have 175 billion is what they're predicting for their FY25 total addressable market. So they think that the total addressable market for the solutions they're building, because you've got Tableau down here, you've got all the different product sets that they're working on from this wheel up here, you know, commerce and integration and all those different things. All these different companies have been acquiring to make this one complete solution. They see themselves having $175 billion total addressable market in the next 5 years. So growth opportunity, this is, you know, great. This is revenue and TAM. You can see FY17 to FY21, the TAM went from 8 billion to 14 billion, and now all of a sudden 21 billion. You know, so, you know, systems of intelligence, evolution from record engagement to intelligence. They want to increase rep productivity, revenue cloud, industry products, and so on. I think these are really cool slides, and I love it when companies do this for us so that we can have these visuals. This talks about their growth opportunity, their omni-channel engagement, and this is FY17 at $12 billion to FY25 at $32 billion. Of course, you know, amazing growth potential there over the next 5 years. Here's their marketing and commerce. They see themselves going from, you know, 24 billion in FY21 to 41 billion for their TAM. So that, you know, there's a lot of run rate left on a lot of these. You can see there's tremendous opportunity. Platform, they see themselves going from, you know, 21 billion all the way to 32 billion in FY25. Their analytics, now this is Tableau again, going from 17 billion in FY17 all the way to 49 billion. So they've got this clear path, this clear model for all these different product layers and the total addressable market that they're trying to get to, or that they think that they can grow into. You know, sales, service, marketing, commerce, analytics, platform integration. And it talks about how they're a leader in the Gartner Magic Quadrant for Salesforce automation, for, you know, customer engagement center, for all the different products they have. So I think this is really important if you're, you know, interested in investing in the company, to understand that they're not just doing, you know, Salesforce CRM. A lot of people maybe have used Salesforce CRM for their job, and they log in and they, you know, they track leads or whatever. This company is much, much more than that, and they're continue to evolve into that digital transformation type company. Now here's their industries, so vertical software, and this is really interesting, I think. So they've got, you know, banking. I mean, pretty much everything's in there, and you can take a look on your own. But there's a lot of growth opportunity that they're showing here. Really cool diagrams you can go through here. You know, here's their Einstein predictions. AI powered prediction fuels customer growth. They're showing, you know, 1 billion predictions a day in FY19, all the way to 80 billion predictions for their Einstein. Competitive advantage, you know, culture, you know, stakeholder capitalism, all these different things they're doing. This is a really powerful one here. So the global leader in CRM. Now this is just talking about CRM. So look at Oracle. You know, Oracle, I'd mentioned earlier at the beginning of the video, they had Siebel Analytics that they merged with in 2006. And, you know, now Oracle only has 5.3%, and they have other things in there. I think they own NetSuite, and there's a few others, but, you know, Microsoft has 3.8%, Adobe has 3.9%, SAP has 4.8%. Salesforce dominates. They have 19.8% right now, and they're continuing. You can see, you know, in the last year, how this chart's going up or they're going down. They're taking market share from these guys, and I think that's going to continue to happen. Okay, this one here, I had to move my picture over. Generational opportunity. So this is a really important one, I think. So this goes back to FY16. So if you look way on the bottom left, that's $6.7 billion in FY16. And look at that growth trajectory. So right now we're in FY20, $17.1 billion. They're thinking that, you know, their core target is 46 billion, and they show Slack here. Slack is the FY26 target is $4 billion. So their total is, with the two combined, so they think Slack will grow into a $4 billion basically company or target within the next 5-6 years. They're thinking that their core products they already had before Slack is going to be about 46 billion. And basically by FY26, so the next 5 years, they're looking at $50 billion plus, including Slack, which is a 19% growth rate from FY21 to FY26 in those 5 years. Pretty impressive. You can take a look at these slides. There's a ton of them out there. There's a lot of good information. It talks about how they execute with their land and expand, their multi-cloud adoption, their international expansion. I think there's a lot of room for international expansion for them. Just really, really cool slides. I mean, you can see how long this is. So I'm not going to go through all this. I will give you the link so that you can go through these on your own and take a look. But yeah, I mean, their revenues, operating margins improving, their cash flows improving, their sales are improving, their growth's improving. This is really important if you look at this. So generational opportunity. I'm going to scroll up so you can see they're going to be the fastest to $50 billion, including Slack. And they have Microsoft here at 28.4. You can see since the company's been founded. So, they're basically comparing themselves in terms of their growth trajectory versus number of years it's been since they've been founded. Microsoft, is at 28.4, Oracle at 10.2. So it's showing in the same number of years. So don't be confused by this. It's showing, within the same number of years that they've actually grown twice as fast as Microsoft is what they're trying to show you here. And that is important to note. That is really important to note, actually, that when you're looking at this company, I think that is an opportunity, but it is a mature business. And so it's not going to grow anything like a CrowdStrike or a Datadog or a DraftKings or a lot of those different stocks, right? So this is a growth stock, but it's mature growth. So when you think of ETFs, for example, you've got the SKY that I like, the SKYY. That's mature cloud growth, and it's not going to grow the same as, like, there's a CLOU ETF, there's the WCLD ETF, which is a fired up wealth favorite. But, the WCLD ETF is going to have things like, Zoom in it and CrowdStrike and Fastly and, those kind of stocks in there, Cloudflare. Salesforce might be in both of those, but it's not really truly the definition of what should be in a WCLD. When I think of it somewhere in between. So it's mature cloud growth. It probably has a little bit more growth opportunity than some others, but it's definitely not in the same category as a CrowdStrike or a Datadog, what have you. So I think this stock will outperform the market, the general market. When you think of the S&P 500, I think it's going to outperform by maybe, say the S&P 500 is up 10%. These guys are probably up 15%. So they'll probably outperform at a decent clip, but they're not going to give you 50% returns a year, in my opinion. Now, the stock right now is trading at $221. The all-time high on the stock was actually $284. And the 52-week range is 115 to 284. So what I'm going to do next is I'm going to look at a chart, and I'm going to show you where I would probably buy it. But to give you my analysis on the company, on the stock, I've owned it for a while. I think that they're going to continue to grow at a decent clip. I think a lot of these targets they have in here are very obtainable for the company. I think it's a pretty quote-unquote safe bet in terms of other stocks. So it might not give you as much reward as some other stocks that we just mentioned, but it's going to be, in my opinion, one of the easiest stocks for me to put my money in and not really, worry about it. I'm going to sleep well at night if I own a good chunk of Salesforce in my portfolio. The other thing to keep in mind that's really important is it's in the Dow. So there's only 30 stocks that are in the Dow Jones Industrial Average, and Salesforce was recently added this year. I think that does help the stock. I think that it helps more people have insight into the company, and it gives them opportunity to outperform even more. So I like the company. I like the stock. I think that you'll outperform the market with it, but you can't treat it like, a hyper growth stock. This is not going to act like a Tesla or a Fastly or a NEO or anything like that. This is going to be kind of in its own league as its own kind of, it's not paying a dividend. So it's not like Microsoft, because Microsoft is what we call dividend growth investing for fired on this channel, DGIF. Salesforce isn't paying a dividend yet, but that's something to note. They're going to give you very healthy growth and profits. So they're profitable. This isn't one of those companies that's burning cash and that you're hoping that it's going to do well. These guys have proven themselves to do well. They're increasing, everything's getting better. Their profit margins are getting better. Their cash flow is getting better. Their revenues are getting better. It's a real mature company, but it has a lot of room to grow. It just doesn't have as much room as some of these small cap stocks or mid cap type stocks, the $5 billion type stocks we talk about. There's going to be more risk reward with those type of stocks. But this company is going to give you several years of healthy growth And then eventually it might even start paying a dividend like Microsoft, where it could be a DGIF. And it could be, 10 years before that happens. So I'm not saying that they're going to pay a dividend anytime soon. What I'm saying is once they get to a certain maturity level, they're bringing in so much cash and so much profit. At some point, that's when a company starts to pay a dividend. Right now, they're going to invest that capital. They're going to take that cash. They're going to reinvest in acquisitions and ways that they can grow. But at some point, it's likely that they're going to get to a maturity point where they'll actually start taking some of that money and maybe pay a small dividend. Even Nvidia is acting like a pretty hyper growth stock, right? And they pay a small yield, not very big, but it's still considered DGIF. So think about all the opportunity that a cash generating machine like Salesforce has for dividends, for stock repurchase plans, all kinds of different stuff. And there's a million things I could talk about on Salesforce. They're doing a lot with COVID right now to actually help organizations track their employees and things like that. I mean, there's this, I can go on and on. I could spend 3 hours on Salesforce. Mark Benioff is a great leader, in my opinion, a great CEO. They do a lot of good things as well. So it's a company you can feel good about working at, investing in, because they are trying to make a difference. And Benioff is kind of a unique character, just like his mentor Larry Ellison was, and somewhat of a maverick. But he knows what he's doing, and they get the job done. So I think it's a buy. I definitely think it could go lower. I'm going to show you a chart and show you a little bit more analytics on it. But from a fundamental analysis perspective, that's my thought on Salesforce. I'm happy to answer questions. If you have questions about the company, I know this company very well. It is one of my core holdings in my taxable brokerage. I'm actually considering, if it goes much lower, adding more. I do have cash covered calls on 100 shares that actually are expiring soon at $290. So that was just free money. Because basically, if you're not familiar with cash covered call, well, that's probably for another video, but I got paid $1,000 premium, and the only way I lose my shares is if it gets to $290 by, I think it's December 18th, which doesn't look like it's going to happen. Let me just double check that. So yeah, I'm looking at my other screen over here. December 18th, 2020 call, $290. So that's going to expire in 4 days, and I'll get to keep my $1,000, and I'll get to keep my 100 shares. So that worked out really well. Let's take a look at a chart. I'm going to show you some levels here on Salesforce in case you're interested in buying. I'm down here. So this is TradingView, and anybody can use TradingView. They have free accounts. They have paid accounts. I've got a premium plan, and yeah, it's good. I mean, I use a combination of a few different tools. I use my Fidelity Active Trader Pro. I like using TradingView. I've got a couple other things that I like to use in my toolbox, but you never want to use one tool by itself, but this can give you an idea of where the stock might go. And generally I like the dollar cost average. So if I'm buying a stock, I'm not going to go all in right away. I usually will buy in chunks. Now, looking at Salesforce, I think it could go a little bit lower than this, but it might not. It might actually just churn in this range and start going higher. So that can be a risk if you really want, to own the stock. But if you dollar cost average, it's really hard to lose that game because you're leaving yourself some room if it goes lower. If it runs, well, you just own a little bit less shares. At the end of the day, you got to do what's best for you. This is a $202 billion market cap, according to this. They don't have earnings again until March 3rd because they recently had them. The PE, according to TradingView, is 58.11. Let's first look at the technicals. Now, you never want to buy or sell based on these wheels, like saying it's a strong sell, or if it says strong buy, it doesn't mean you should buy. Do not use this. And I want to remind everybody, I'm not a financial advisor. I can't tell you when to buy, when to sell, anything like that. I'm just here to basically give you information and you make your own decisions. Now, the RSI is what I want to show you here. It's 34.85. So it's getting pretty oversold. I mean, generally speaking, it's neutral. There's some stocks that will trade, at 92 on the RSI for weeks at a time, and there's some that will trade really low and that just sit in a relative strength index that's garbage for weeks and weeks. So it doesn't always mean anything. It just gives you an idea that there's been a lot of sellers. There's not a whole lot of buyers. The RSI is pretty low, so that can give you an indication that if that starts to turn around, that maybe the stock price will go up. Now, if you're looking at the 200-day moving average, the simple moving average is $203.15. The EMA, which is a little bit faster moving, is going to be $2 or $214. The 100-day moving average is 232, which we've broke, and then 237 for the simple moving average. So the EMA and the SMA there. So we're at $221 right now. So what do I do with this stock? So let's look at a chart. I'm going to go back and go to a full featured chart. It's going to pull this up. Now, I do actually have NASDAQ and I do have OTC data on here. So this actually should pull up for me. I'm going to do a year-to-date chart, and I'm going to look at, if you come in here and you go under templates, you can get this, you go to swing trading. It's going to give you your zigzags. Now, I also like to sometimes change this. So I'm going to click on one of these bars right here. So I'll click on those bars there, and that's going to bring up the pivots. And sometimes I roll this down to 5 or something just to make it a little bit easier to see. So now this is a year-to-date chart. I'm using daily candles on this one. You can see that I kind of drew these lines earlier. Hopefully you can see this okay. Let's just do this. I'm going to go a 1-year chart. So you can see I've kind of drawn these red lines. This is just, this isn't perfect or anything, but basically just kind of showing the channel that it's kind of trading in here. And you can see that there's this pivot point here that's at 225 bucks. It's broke that, and it's actually trading in this dotted red line right here. Now, it could actually go down to this next, area, which is $205 range. It could even break that and go lower, of course, which would be, in my opinion, a screaming buy opportunity if it was below $200. I personally think that if I were buying this and I didn't own any shares, that I would dollar cost average pretty much any time. If you could get it below 220 or below, I think you'll probably be happy with that price if you hold it long term. Could it go lower? Could it break 200? If the whole market sells off and we have a huge sell off or something, absolutely. It could easily go, to this $200. I think you would get quite a bit of support around that $200, $205 range if it did get that low, but anything's possible. It could easily break that and it could come below 200. I would certainly be buying for sure if it got below $200. It's trading at 221. You can see if you look at a 5-day chart of this, it's really just trading in this range. It's just kind of sitting there. It's not really doing a whole lot. I mean, this is 5-minute candles, so we'll go 30-minute candles, give you a little bit better view. But you can see, this thing sold off, and 215, it kind of bottomed out here, and it kind of, it's hit 220 3 different times. So if you take this green line right here and you look at, so it broke it here. This is the low at 215, and you just draw basically, you're basically hugging that line of where we're at right now. It's just, it's wanting to kind of sit at that line for almost like a support line, but it's hit it 3 times. So the chances are statistically that it probably isn't going to go lower than that, but it doesn't mean it can't. So could it go lower than that? Absolutely it could. And if it does, it could even be a sharp, sell at that point. When my RSI is close to 30 and I'm looking at this thing bottomed out in the last 5 days or whatever at 220 3 different times, it's telling me that people are going to come in, maybe even algorithms are going to come in and buy it at that price. It's telling me that $220 is probably a decent spot to buy some, knowing that it could go lower, but knowing that if you're a long-term investor, that you could always add more if it goes lower, and that you'll probably be happy holding it long-term. So I hope this video helps. If you have not subscribed to the channel, please do subscribe. Also, please hit like, please comment. It means a lot to me. It helps get me in the algorithm. It's really great, all the support I had. I just got my year review for 2020 for the Fired Up Wealth channel, and it's just amazing. Over 3 million minutes viewed. So I appreciate anybody that's watching this that's gone 30 minutes with me on this. That means you've probably contributed to a lot of those minutes, and I thank you for that. If you're not already on Patreon, you can Google Patreon plus Fired Up Wealth. I encourage you to check that out. We also have a free Facebook group. I'm on Instagram. I'm on Twitter. But yeah, hopefully this helps. I appreciate you watching. Have a great rest of your day. Take care.